Well, good morning everyone. As you can imagine, there was little change in the FX markets over the Christmas period. No news on the fiscal cliff problem, which is the main issue moving the market nowadays, means no one's got any impetus to take a big position, especially this close to the end of the year. There's now talk of a small temporary agreement on the fiscal cliff that would just kick the can down the road for a few more months. I think that would be really dollar negative because it would leave the debt ceiling problem unsolved. The debt ceiling is going to start to be a talking point in the new year as the US is going to hit up against the ceiling in February if nothing happens. Last time that occurred, it was a disaster for US financial markets. So Eurodollar spiked to 132.30 on Monday, but has lost most of the gains and just traded quietly over the Christmas period. We see it now testing support around 131.60 before moving higher again later in the day in what's just range trading at this point. The yen was the main mover over the holiday, falling further as Prime Minister Abe was sworn in. Having been the best performing currency in 3 out of the last 4 years, the yen was the worst performer in 2012, down about 13%, and we expect further declines. Abe reached an agreement with the head of his coalition ally, the new Komeito party, on a package that includes his bold monetary easing to reach an inflation target of 2%. Now, the new Komeito party had been reluctant to go along with this objective before the election, so the fact that they've now signed on adds to the pressure on the Bank of Japan and on the yen. We think Eurodollar is technically in a range against so that the euro is in a range against the dollar, but it's likely to rise in the near term. Meanwhile, the yen is likely to weaken further. That means, once again, we recommend buying euro-yen, which in fact has continued to move higher today. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.